right, welcome back, everyone. We are here again to continue our series. The other time we introduced ourselves to what trading is, what exchange is, and then from there we moved over to how to define your risk, how to know what risk you can bear, the risk threshold. Okay, so this time we are going to look at another thing. In case you've not seen those videos, you just go back on the playlists, all right, from zero to trader. You are going to see the step-by-step approach. It is broken down. The reason why we are doing this is so that before you approach anything, you don't just jump into the markets and start making trades, or you start seeing charts and then you just make it and become a trader. No, that's not how it is done. Everything is systematic. Even your growth is systematic. You started growing one day, the second day, and it continues to expand. Knowledge only expands when you keep working on it. And then you see there are many topics online that could make someone a doctor. There are many topics online that could make someone a lawyer. But would you become a lawyer by simply going on YouTube and seeing videos? No. There has to be a system. That's why you must go to school. That's why you must be taught. That's why you must get the education. So the education must be broken down if really it will sink. Because even if you are to get a tree will start from a seed. All right. So everything starts small and it grows. So that's why we decided to make it in this form, step by step, gradually, and then you grow into knowledge of what you are doing. Okay, today we are going to discuss about applying your risk and reward system in the market. Because this knowledge is important in that it helps you know what you're going to the market to do. You form a mental picture. All right. So one of the posts we made on the channel is this: for you to become a trader, the first thing is you need to get the mindset. The mindset is important. The first thing that should come is the mindset. When you have the mindset, the next thing that follows is the skill. All right. It is the mindset that pushes you to get the skill. If you don't have the skill, and if you don't have the mindset, rather, and you go for the skill, you will create a burden on yourself. You might not even know why you're doing what you're doing, but the mindset is there. And when that mindset is there, you go for the skill. When you get the skill, then you put a rule, you put laws, systems that help you work with that knowledge, with that skill in line with the mindset. All right. So that's how to be a trader. So no one becomes anything without first having the mindset. Of course, we are just talking a little bit about trading psychology here, although it's still a topic that will come in line as we go. So what is the mindset? The mindset is business. You are here for business. So you're here to risk and you're also here to take your rewards and profits home. So that's what it is. So how do you apply it? We have learned how to define your risk. In case you've never done that, please go ahead and do it and have it documented to know what you're doing. So how do you apply it? What is the nature of the market that will allow you make these risks and expect rewards? So the nature of the market is this: the market is either bullish, in that it is going higher, buying, it is buying, or it is bearish. That means it is going down, but it doesn't go straight. All right, it doesn't go this way straight and it dies, and then straight down it sells. No, that's not how it behaves. When it is bullish, it means it is making a series of highs, lows, highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. This is the system. What tells you that this market is actually buying is that you see the highs being taken out. You see the highs being broken. All right. You see the highs being broken and the lows being protected. You see the lows being protected. All right. This is what makes it bullish, because you are seeing the highs being taken out. They keep breaking the highs and keep protecting the lows. You see that this low was never broken. All right. And this low was never broken. This low was never broken. And you also see that though market tried to approach this low, it was still not broken. So you can see the lows being protected while the highs continue going out. They keep breaking out of the highs and they keep reserving the lows. So you can see that this low is here, not taken. This low is here, this low is here, this low is here. Meanwhile, the highs keep going off the way. All right, it keeps going off the way. So what do you do as a trader when it makes a high and makes a low? Then you see the high taken out. What do? You wait for the price to come into this area and then you can take your trade. All right. So you watch our weekly analysis, you will see it is the same thing. Of course, the weekly analysis keep coming out. Every week we post videos on analysis. And there's no point analyzing many charts and getting yourself confused because apart from trading, you have other things to do, right? So in this case now, the high is broken. You mark it as this has broken. What do you expect based on this picture? What you now expect is for price to come in here and you make your trade and you continue higher with it. Remember the idea we gave you. We told you you are only joining the train where it is going. And the train travels in coaches. So you can see from here to here as a coach of the train. All right. You can also see from here to here as another coach. So you can call this one of the coaches of the train, which in terms of trading, we call this expansion. This expansion happened here and another happened here, taking out the previous expansion. Taking out the previous expansion. So these are coaches of the buy activity. So it means that some people bought from here, and when they got here, they took their profits. Others came here, bought. When the price got here, they took their profits. And of course, when they have taken their profits, the strength that moved the market from this point to this point B is off the market. So what will the market do? The market will then drop. It will sell. All right, it will sell. But that sell is not targeting to clear the lows, to take out the lows, because it's just a pullback. All right. So the train continues, the movement. Just like what we gave you the illustration, we said you observe a particular car, vehicle on the first video. We gave you an illustration. You observe a particular vehicle that it behaves in a certain way, it comes back after a certain number of minutes, it takes people and moves. So what you do is you join it on the next movement. So this movement goes, comes back again, you join it on the next movement. And where are you targeting? You are targeting the last point it got to before it started coming back. Okay, so let's assume you have gotten this movement and you're joining from somewhere around here. Where will you target? You will target this high. All right, this is your target. Please don't target any other thing. And while it is going, if there are opportunities to take some partials, you take. So this is what it means. You have waited for price to come in here. So where will you? So this is it. You have waited for price to come in here. So where will you target? Your target will be here. This is your target. And if this is your target, it then means that you are buying from somewhere here. Let's assume this low is your risk. This is where you're placing your stop loss. All right. So let's assume you're buying here, and this is where you're taking your profits. You can check it and see where it is written risk reward ratio. You can see it is 2.21. So you're making 2.21 extra of what you're risking on the market. The green area is revealing the green area shows your profit. The red area shows your risk because you don't expect price to go below this. All right. So you are going to place your stop loss below here. The market might even make more movement downward. All right. It can make more movement downward. So however it is, but your target is here. And you can see that it is just clear. This is your low where you're placing your stop loss. If for a chance it clears out this low and you were wrong, but you must have seen confirmations. Of course, we're going to teach you how to confirm your trades before you take the trade. So your stop loss is below here and your take profit is above here, this is why you're targeting. You're not targeting any other thing, all right? Just take out profit once it gets here and close and go. That's what I advise. So now when this is taken, you can clear this market and say, okay, that is a coach of the trade taking. The market might just make another movement and you wait for it here again, and then you trade, all right? You move your interest into this area again and wait. Then when it comes back again, you take another trade. That means you are only joining the movement. You are still targeting this high again. This is the high you're targeting again. So you keep buying as much as the market continues to show you these actions. Buy, it makes a pullback, it buys again. It makes a pullback, it buys again. And you're just joining. That's what you're doing. You are just joining. You are not defining for the market, okay, it is selling, then it is going to clear this low. Don't try to determine the market's movement, please. Only analyze it, see what it is doing, follow what it is doing, join it in the direction that it is going, and move. Define your risk, what you are willing to risk on that trade, and where you expect to take profit. If you don't know where to take profit, don't trade. All right? You must know where to take profit, and you must know where to accept that, okay, this trade has gone into a loss. If you didn't decide it, if you didn't determine it, then it becomes a problem, because this is business. You are determining where you're going. How you will get there is what we will teach you. So the job of an analyst is different from the job of a businessman. This is trading as a business. What you're doing now is business, in that you are buying. As long as it keeps buying, you keep buying, defining your risk and your reward. That's what you're doing. That is business. But how to analyze the market and know where to buy, when to buy, that becomes an analyst's job. And of course, as a trader, you will be an analyst, you will be a businessman, and you will also be a psychologist. All right. These are the three things you're doing. You're just doing this. The first thing you're doing is business, and the second thing is analysis, and then psychology. These are the three things you're doing. Business is to make money. Analysis is to determine how to make money. Psychology is to have the balance, the emotion to hold on to your trades and wait and do the right things, knowing the realities of the market and following it. These are the three things you're doing in the market. All right. So this is how it goes. For a bullish market, this is how it goes. For a bullish market, a market that is bullish simply means it is buying. You can say a buy market, bullish market, an uptrend. So this is an uptrend, in that it is going higher. It keeps making highs and lows. So this is what you do in a bullish market. So we're going to talk about the bearish market. In a bearish market, the system continues. All right. So you're going to see a movement low, this low high, this lower low, lower high, lower low, lower high, lower low, lower high, lower low. So as it were on the other one, this also represents a coach of the movement, just like a train. All right. So this also another coach of the movement. These were actions. All right. This is another coach, like what we call expansion. All right. You can call it impulse. Some people call it impulse. Those in the Elliott wave, and of course, we're still going to talk about that briefly. This is an expansion, or it is a wave. So these are the opportunities because of the direction. Not that we couldn't have traded the pullbacks, but we just want to be the people joining. All right, we are just joining so that we wait for the vehicle to reach where we are and continue in the direction it is going. We are not determining for it. We are not going to say, okay, let's join. Don't play smart with the market. Don't play smart with the market. Only join. What we're going to do next is that we're going to expect price to move. So we're going to expect price to move back here, and we take a trade targeting this low. So we're going to now mark this area. We are going to show you how to mark the area when the time comes. We mark this area as our entry area, and we are going to target this low. So when that happens, we define our risk properly, take the trade here, placing the stop loss above this high and placing our take profit at this level. Can you see that your risk and your reward are all determined? You can see 2.17 reward to risk, risk to reward ratio. Can you see that where you're entering is defined and where you're exiting is defined? It's just like someone who wants to travel. You don't know where to join the vehicle. You don't know where to jump off the vehicle. You are going to make mistakes. They will take you to another location. So we know where we are entering and we know where we are exiting the trade. This is what it means to be a businessman. You know what to take, you know what to reject. So if you have not defined this, you will find yourself making profits and giving it back to the market. You're going to find yourself making a lot of mistakes in the market. So, and that's not what you want to be doing in the market. You simply want to be making trades. You want to be taking trades. You want to be making money and keeping the money. When you lose, then let it be a loss, clear loss. All right? Let it be an objective loss that maybe you took this trade and instead of this market making this move, it goes this way. Remember the first illustration on the first video to hit your stop loss. Then you say, all right, that's how to trade. So we're going to still teach you, all right? We're going to teach you as the videos expand, the series expand. You're going to know how to understand that the market is changing, how to follow the market in the new direction, how to, align the warning signals that the market will give you when it is about to reverse. All right, all those things are going to be explained. Just make sure you're following this series. By the time you're done, we said it is from zero to trader. By the time you're done following this series, you will understand a lot of things about trading and you are going to live trading as a normal life. So there is a difference between going to the market and living the trader's life. There is a life that traders live, and that is a life of simplicity, objectivity, and understanding. All right, thank you for seeing this video until this point. We know we have covered only 3 topics here. We still have much more to give you. So ensure that you keep coming back to check when we post the videos. Like, share, and subscribe to the channel and invite your friends. Let's see how it goes. Let's grow the community and at the same time make profits while we learn. See you there.